It's March 7, 2023, 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. I'm Ladi Williams. Hope you had a great day yesterday, great trading day. First off, let's look at what's happening with other markets. Now, we see oil prices were little changed today. With Brent crude futures, that rose about 18 cents to $86. 36 cents a barrel in early trade after settling about 0.4% higher yesterday. And we see the U.S. WTI crude that was trading at $80.62 per barrel, up 16 cents, following a 1% gain in the previous session. We'll drill down on the market drivers later on the show. Let's look at edible oils now. We'll see Malaysian palm oil futures fell and to snap the three-session rally amid significant profit taking after recent gains. Vegetable oil and lower crude prices added pressure to the price action there. The benchmark palm oil contract for May delivery on the Bursa, that's Malaysia Derivatives Exchange, that slid about 88 ringgit to 4,264 ringgit. That's about $955 per ton by the midday break. Palm futures prices edged lower, mirroring the losses in palm and amid the tense profit-taking and positioning ahead of the price outlook conference, driving the market lower. Dalian's most active soy oil contract, that dipped about 0.27%, while its palm oil contract fell 1.64%. Soy oil prices on the Chicago Board of Trade, BOCV1, that was down about 0.49%. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils market. And following the ruling of the Supreme Court on the legality of old notes, the Lagos Chamber of Commerce and Industry is asking all concerned to uphold the rule of law by ensuring only lawful options that respect and protect the rights of populace are considered in pursuing varied objectives of payment policies in the future. On Friday, March 3rd, 2023, the Supreme Court of Nigeria, the Apex Court, declared the federal government's Naira redesign policy as an affront to the 1999 Constitution that breached the fundamental rights of Nigerian citizens. Therefore ordered that the old 200, 500, and 1,000 Naira notes remain in circulation as legal tender until the end of the year. CBN had announced the currency redesign policy in October, and the new notes were released in mid-December. There were some reports yesterday that some banks were actually giving out the old 500 and 1,000 notes. We'll drill down and see how that plays out today. Now, let's go to Abuja now. We'll see fuel queues have resurfaced at petrol stations across Abuja, that's the nation's capital city, with many motorists scrambling to get premium motor spirits. Motorists lament the man-hour loss at petrol stations in their effort to get the product. However, the Nigerian Mainstream and Downstream Regulatory Authority blamed the queues on restrictions of movement during the just concluded presidential and National Assembly elections. Take a listen.
Long queues of motorists at petrol stations in the nation's capital are becoming a regular sight on most highways. The queues are staging a comeback after it's disappeared, albeit momentarily before the elections. Most of the motorists here have been in the queue as early as 6 in the morning in an effort to get the product. This has led to loss of manpower and increased frustration.
I've not gone to work. I've been here and I can't move from here without the fuel. So I have to get the fuel before I get to work. And it's not fair onto us. I don't know what I'm expecting in the office, whether because I'm practically absent and it doesn't make sense to me. But I still have to get fuel today.
How can we be queuing up for fuel for the past, about 7 hours? We've been here and the queue is not even moving.
It is a survival of the fittest as motorists lament the chaos of queues amidst the absence of security operatives to ensure order.
I joined the line here since 6 o'clock in the morning, 6 a.m. in the morning. Up till now, this is after 3 o'clock. I'm still on the line. Now this line has been totally blocked. There is people that owns the coupon that has to come and buy fuel. Are we not Nigerians? Are they more Nigerians more than us? Last week, before the elections, they told us that DSS has been directed to clear the filling stations. Where are they? This is in the city center of Abuja. Where are those DSS?
The queuing up, being orderly, is not working. So that's why we spend more time. You queue up, there are people who come to the main gate and they go in and buy.
Since morning, we've been here since 6 a.m. No road safety has come to clear this road. No police officer, no military.
Nevertheless, illegal sellers of the product popularly known as black market are having a field day. However, the Nigerian Mainstream and Downstream Regulatory Authority says there is enough product to serve the nation for at least 35 days. According to the agency, depots have fully resumed operations following the restriction of movements during the just concluded presidential and National Assembly elections.
Hopefully we can get these field queues behind us permanently this year. But now let's move on to our first conversation. Now we see the Central Bank of Nigeria announce an important change in the tenure limits of banking executives and non-executive directors. The most significant shift by the CBN is that bankers will now serve a maximum total of 20 years as executive or non-executive board members. For analysis now, let's talk to Kelvin Emmanuel, economic expert, joining us from Abuja studio. Good morning, Kelvin, and it's nice. I believe you could get fuel to come to Abuja studio today.
Good morning, Ladi.
Good morning, Kelvin. Yes, yeah, so I guess the issues still remain with us, but let's look at this 20-year limit now for bank executives. Break it down for us. What does this limit really mean for these bank chiefs?
Well, so the central bank basically release a circular that says that group managing directors that have left the banks and, for example, are going to go into the holdco structure of the same banks, because if you check most of the banks from 2012, when First Bank and Stanbic IBTC set up holding company structures, most of the banks have now reverted to holding company structures. GT Bank, Access Bank. I think Zenith Bank is the latest that has its holdco structure approved. Quite a number of them, following the fact that in 2009, 2010, the past governor of the central bank, Sanusi Lamido Sanusi, had stopped the universal banking model and required that the banks focus on their core banking business. So basically, he says that if you've been a group managing director for 10 years, which is the limit until this circular was announced, you're not allowed to do more than 12 years cumulatively, even if you become the MD of the holdco company, And by this, I'm sure Mr. Segun Agbaje that is gone to the holdco is going to be targeted, and quite a number of them. He also says that for executive directors and deputy managing directors that have done a cumulative term of 10 years are not allowed to, in case they are promoted up the ladder, they're not allowed to do more than that 10-year limit. And he also says that if you've been in executive management, you're not allowed to do more than 20 years cumulatively. Now, the reason that they're giving is that they want to create an opportunity for the younger bankers who are immigrating from the country to have a career path through the system. But then you need to ask yourself that considering the fact that in the holding company structure, which in my opinion is a backdoor for universal banking that Sanusi Lamido Sanusi had banned about 13 years ago, they have other regulators that they answer to. They have the likes of NICOM, they have the likes of the PENCOM, they have the likes of NCC, Securities and Exchange Commission. So the question you have to ask is, did the central bank actually check with those regulators before it passed the circular to say that these executives are not allowed to serve in the holding company structure? Because you cannot discount the fact that the banking industry is a very delicate industry, requires a lot of skill and a lot of experience. And having EDs and DMDs under the tutelage of the group managing director is absolutely critical for that passage of baton and that change of guard. You know, it's not an industry where you can just bring anyone. You need cumulatively somewhere around maybe 15 or 18 years of experience to have the wherewithal to rise up to the position of either a deputy managing director or a group managing director of a tier 1 bank in Nigeria. So for me, the question I have is, was this like a target for executive who protested against the governor of the central bank for his Naira design policy at the bankers committee? Was this like a way of getting back at them? Because, you know, you cannot take out the fact that we've all seen how the Naira design played out. Several months ago in October of 2022, we were discussing this topic on TV. And I remember I said specifically that I believe there was an ulterior motive for the Naira design policy other than the one the central bank had given. Well, time proved me right. Over the month, we saw it play out, and we've seen that there was an ulterior motive, and the intentions that they said was the reason why the policy had been designed is not what it played out to be.
All right,
so
but Kelvin,
I'm not.
Yeah, but you know, you talked about targeting, you know, some of these bank chiefs. But what's the practice in, you know, other countries? Do we have, you know, tenure limits like these put in place in other countries for their banking industry?
You know, the circular talked about, you know, to ensure corporate governance. It's quite amazing that he talked about ensuring corporate governance, because if you permit holding company structure, in my opinion, which is like a backdoor, and for example, if you look at BOFI Act of 2020 that was signed by the president in November of 2020, you look at sections 13(4) A, B, C of the BOFI Act of 2020 that talked about consolidated statements, consolidated account statements for Nigerian banks. And it basically said that if you're a bank or a subsidiary or a holdco, it defined the way for bringing consolidated statement. Now, what does that mean? That means that holdco and core banking operations are lumped together as one. And it presents systemic risk that the holding company structure is doing its annual returns or accounting with the core banking operations. Yeah? Look, if the holdco has risk-weighted assets that are high, and that reduces the capital adequacy ratio of the bank on the consolidated accounting model, it poses systemic risk to the core banking model. So I do not see the need for you to query the tenure limit of senior bank executives when you've allowed holding company structure that poses more systemic risk to the banking system than the tenure limit of the banks.
So is it that the 20 years is not enough? Is 20 years not enough?
The question you have to ask yourself is, what's the relevance of limiting the term of senior bank executives to 20 years? What's the argument for it? Is it necessary? Like, is it going to improve the performance of the banks? Is it going to improve their the quality of their regulatory capital? Is it going to improve the quality of their assets? Is it going to bring them more business? Is it going to improve the quality of their service? What's the case for limiting the tenure of senior bank executives, really? It doesn't make any material sense to me. I always say, Ladi, there are bigger fishes for the Central Bank of Nigeria to fry. And sometimes when they make decisions and release circulars, you begin to ask yourself, what really is the end game to this? And what's the relevance to the economy?
So looking at, you know, this limit now, what would you say, you know, are some of the pros to it, even though you've mentioned some cons?
Well, the pros, for example, might be, like they said, okay, you want to bring in fresh blood, you want to keep young bankers who are within the system from moving out of the country, so that they see a career trajectory and they can say, okay, the EDs and the DMD, they have a tenure limit, so at least there's an opportunity for us to rise through the ranks. But the question you have to ask yourself is, what's the percentage of staffs of banks let's not even say contract staff, permanent staffs of banks that are actually recognized as direct staffs of banks and are entitled to benefits from the bank, actually rise to senior management. So, to be honest with you, I struggle to see the incentive and the, importance of, putting like a tenure limit on banks, because like I said earlier when we started, banking is a very delicate business. It requires a lot of experience, from treasury operations to investment banking to consumer banking. It requires a lot of experience. You have to deal with regulators, you have to deal with your board, you have to deal with shareholders, you have to deal with customers, you have to deal with operations. It's a lot of work. So to be honest with you, I don't see the case for it. I don't see how relevant it is to the economy at this material point in time.
All right, let's look at it from the angle of investors now. How do you think this will impact, investor confidence? Some investors might be attached to, a particular executive because of maybe performance or profit, delivery. How do you see this impacting investors?
Well, I think it's going to impact investors negatively because, like you said, performance. Investors, they invest first in the team and the leadership than they invest in the product or service. So it's important that they know that the people who are at the helm of affairs and that will take on the saddle and succeed are people who are well trained and grounded. I said earlier that you require somewhere around 15 or 18 years of actual experience to be able to qualify for the position of maybe a deputy managing director or a group managing director of a tier 1 bank in Nigeria. It's not a cakewalk. It's a lot of hard work and a lot of understanding and rigor, and grits, both the ones that you're taught and the ones that you observe and you learn. So it's not. I think it's going to have a negative connotation for investors, and I don't think it's a good omen. But overall, I honestly believe that the banking industry is one area that has weathered a lot of storms, and this is another storm that is going to weather. It's going to survive. They're going to, I'm sure they have fail-safes, and they have sustainability planning in terms of leadership within their conduits to train people who take over from them.
Yeah, it's definitely been a tough first quarter for banks with the whole cashless policy and how customers have reacted to the banks because of all of that, and I guess they still have a lot to deal with. But how do you see this impacting the whole banking industry in 2023? What are you seeing going forward?
Well, the banking industry has quite a number of headwinds. It's survived a very turbulent period of retail customer aggression because of the whole fiasco around Naira redesign. For me, one of the most important headwind I think the banks are going to face is the fact that Moody's, for example, downgraded Nigeria's rating to CA1. And because the sovereign rating has been downgraded, the banks automatically gets downgraded. 9 banks have also been downgraded, which means that their credit quality is affected. For me, that's one of the most important headwind that the banks have to face as the economy goes down and it sinks into debt spiral cycle and the credit quality decreases. It has an impact in the ability to be able to maintain foreign credit lines or go to the corporate Eurobonds market to raise capital. So on the other side, I see this as an opportunity for the debt capital markets at the FMDQ and NG Clearing to actually step up to the plate and mobilize capital for banks and for companies to be able to do business and increase the debts and trust of the debt capital markets in Nigeria. But the risk from the downgrade of Nigeria's sovereign rating is actually one major area I see impacting the performance of Nigerian banks in 2023 and 2024.
All right, I guess we'll keep watching and hope the banks are resilient enough to stand all these headwinds. But thank you so much, Kelvin Emmanuel, economic expert. It was great having your perspective today.
Thank you for having me.
Thank you. All right, we'll take a break now. When we come back, we'll head on to the commodities market. That's in a moment. Just stay with us. Welcome back. Let's take a look at what's happening in the commodities market now. Starting with oil, we have Desola Shimoni, senior analyst, financial derivatives company, join us via Zoom. Great to have you, Desola. Good morning.
Good morning, Ladi. Great to have you too. Thank you for having me.
It's fine. Yeah, you're also having me. Well, moderate gains we're seeing with Brent and WTI in early trade today. Is China demand outlook starting to look any better?
Thank you for that question, Ladi. So at the moment, let's start by saying that the oil market is quite tight because of the sanctions of the EU on Russia. So we are seeing Russian oil vessels now travel further distances to look for customers for their oil. So that's the general backdrop. So we also seen some volatility in the oil market. Like you said, we saw better than expected trade data from China. China's trade, they showed a bigger than expected trade surplus, which is positive for the economy. It bodes well. It kind of signals an uptick in economic activity in the coming months, coming days, weeks, and months, which is positive for oil demand growth, given that China is the largest importer of oil globally. In addition to that, we're also seeing a weaker dollar. The US dollar weakened by about 0.16% against the basket of 6 currencies. And usually, because because Brent is denominated in US dollars, whenever the US dollars weakens against the basket of other currencies, it makes Brent cheaper to holders of other currencies. In addition to that, some analysts at Goldman Sachs, the forecast, they see oil reaching about $100 per barrel on tighter U.S. supplies and recovery in China's demand. But overall, I think the more important issues for today, for this week, is markets are looking at the testimony coming from U.S. Fed Chair Jerome Powell to see cues about U.S. monetary policy and also the pace of rate increases. So that is an important factor coming in today and tomorrow, which the market is watching closely, and that will determine also the direction of oil prices. In addition to that, there's also expectations of some data coming on Friday from U.S. non-farm payroll data, which again is going to show whether the U.S. Fed has more headroom to tinker with monetary policy going forward, and all of these have big implications for risk sentiment in the global market as well as oil prices.
And definitely, Jerome Powell has the Fed chair has a very busy day today. He's going to be testifying with Congress, and let's look at the Russian oil price cap now. How's that playing into the supply in the global market?
I think it's having a mixed effect at the moment. Like at the moment now, Russia's oil vessels, I mean, the EU plays the cap, so they're not going to buy, I think, above $65 per barrel, if I'm not mistaken. So in order to be able to still get some higher revenue from oil, Russia's vessels carrying oil have to travel further distances to Asia, for instance, India, so that they can sell oil at the current market prices rather than selling to EU countries or to the G7 or the EU countries that still impose the cap. And that is part of why we are seeing the tightness at the market, tightness in global markets at this time. It also shows that the global markets are vulnerable to any supply disruptions. So, for instance, if suddenly Angola is not able to export more oil, or Nigeria, there's some attack on oil infrastructure in Nigeria, for example, to have big impacts on oil prices at the moment because of the tightness in the market.
Looking at this, back and forth movement with oil prices so far, do you think the bulls should just, the oil bulls should just pack up and leave at this point? Because it looks like the trajectory is down for prices.
I mean, like you said, background is many factors are driving the markets at the moment, Ladi. Like you said, we have already a tight market. There's still some uncertainty about the direction of monetary policy globally. We still have a restrictive monetary policy, a contractionary monetary policy, and the markets are looking for some positives in the market. We're looking for positive data that would indicate the direction or the pace of monetary policy in the US and globally, and those are some of the big factors are driving the oil market. For example, inflation in the US has been a little bit stickier than expected. We saw a decline only by 0.1 basis points for January to 6.4%. The market expects a bigger decline. Over the weekend as well, the ECB already, the Christine Lagarde, the president of the European Central Bank, has indicated that they are probably going to increase interest rates in Europe at the next meeting. So there's still some uncertainty, and all of this, Ladi, it affects the sentiment, global risk sentiment. And if there's a risk of sentiment, then that is also going to weigh on oil prices. It also affects economic activity because, as this central banks globally still increase interest rates to put a lid on inflation. It also kind of drags economic activity, which further reduces the demand for oil.
And looking at LNG prices, last year it hit the high of about $10, last year, but it's looking like it's going farther away from that $3 support. Now it's about $2.69. Are you seeing any recovery with those prices?
This, again, energy prices, energy markets have been quite volatile from mid last year, and they're still going to remain volatile. But for LNG, the biggest factors, there are three big factors that are driving LNG prices at the moment, Ladi. First one is weather conditions. We are seeing a mild winter, Ladi, and even when we see cold spells, the cold spells have been quite short. They last maybe a few days or a week at the absolute most. And with this milder or warmer winter, it means that the demand for oil, the demand for heating, and the demand for LNG is also going to reduce. And because of lower demand for heating and LNG, we are seeing a ballooning of LNG stockpiles in Europe. For example, data from Gas Infrastructure Europe shows that gas storage or LNG in storage is still about 59% full. That gas storage is still about 59% full and about 19% above a 5-year average. So we are seeing huge storage, huge stockpiles of natural gas. We are also seeing bigger imports of natural gas coming from North America, coming from the Middle East. So all of these factors together are putting pressure on natural gas prices in Europe, and that's why we see prices trending downwards at this time.
Yeah, as I said before, the trajectory does seems like it's downward for these energy prices, which is good for the inflation story, globally. But let's look at some of the debt markets. Now, we see the T-bills here and interest rates for the 364-day. That rose to a record 9.90% per annum. What's driving that, and what impact will that have?
So, thank you for that question, Ladi. So, like you mentioned, we are seeing prior to this, treasury bills prices have been quite low, but this increase, I think, is because of the central bank is trying to. I mean, we saw what happened with the Naira redesign policy, and the central bank, I think, they're trying to mop up some excess liquidity in the banking system, at least the banking system, and that's part of why we are seeing treasury bills prices, I think, trend upwards at this time.
And looking at the domestic commodities market, what are we seeing there? Are we seeing some prices, going down at this point, or is it still upward movement?
It's a mixed bag, Ladi. So for domestic commodities markets, if you look at the price of perishables like peppers and onions, you see the price decline For instance, the price of peppers are down 12% month on month to 15,000 naira. I also seen the price of onions down 8.6% to 32,000 naira. And this is partly because of the, the naira design issue, the shortage of cash in the market. So because of that, the sellers of these commodities are having to sell their products at a discount in order to trade, and that is part of why we are seeing those commodities are trend downwards. We also seen some prices remain relatively unchanged, again partly due to the scarcity of naira and also the pressure on the online payment systems. We are seeing the price of rice remain flat at around 40,000 naira. I think the price of flour also remain flat around 40,000, 29,000 naira, and price of cement at around 4,300 naira. So that's mixed bag. We're also seeing some prices trend upwards, but overall, I think the trend is going to be downwards, mainly because of the cash shortage. So people there's a slowdown, there's a drag on economic activity, and that is part of why we expect that going forward, some prices of domestic commodities prices will trend downwards.
All right. Thank you so much, Dr. Desola Sumoni, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
Yeah, so we're talking commodities there, and obviously we still have many other markets to look at now, and we have our local boss now, and Will is right here to give us the details. Will, quite a jump yesterday, talking about the NGX, 0.14%. Looks like MTN did the magic.
Yeah, MTN did the magic, and 14 other stocks. It seems so surprising always to see that the NGX is being pulled by very small amount of stocks in the market. You have over 100.
Even though it was a negative market breadth.
It was a negative market breadth, and you just had about 15 stocks pulling the market up. So it tell you if just 15 stocks go down, that means the rest of the market is going to go negative. So we need to do a lot more in terms of listing and getting real valuation for stocks. Maybe get some better value, and maybe reprice some maybe stocks and see if they could move up to a tier one, bigger guys to come in. It's quite well. It's still a good thing though, because bullish sentiments. Bullish close for the market anyways, and then we'll see the market probably for the rest of the week started on a good note, and we'll see how the rest of the week pans out ahead of elections. So the equities market kicked off this week on a bullish note as bargain hunting in telecommunications players. We mentioned MTN Nigeria led the all-share index to close 0.14% up to sit at 55,605.57 points. Market cap still at the 30 trillion naira mark, is still holding on there. Month to date and year to date returns settled at about 0.17% if we look at it from March the 1st, and 8.5% year to date. Now, total volume traded, however, decreased by 83.5% to 123.55 units, valued at 2.48 billion naira, and all transacted in over 4,000 deals. Sectoral performance, however, was mixed. We saw the banking and consumer goods indexes recording losses yesterday, while the industrial goods insurance recorded gains. Oil and gas was closed unchanged from its opening levels on Monday. Now, on TransCore, look at top trades. We saw TransCore topping this chart yesterday, 11.179 million units of its shares traded yesterday. GTCO followed closely. UBA, 9.19 million units of shares traded. We mentioned earlier it was a negative market breadth. If we look at it in terms of that, we saw about 20 stocks losing yesterday when compared to 16 gainers. Now, Julius Berger was up 10% yesterday. We've not seen that, on the top gainers chart for a while now. Maybe a lot of construction work is boosting investor confidence, or maybe diversifying in other sectors. Now, Unity Bank was also up 9.26%, and International Energy Insurance was up 8.33%. We're still watching International Energy and seeing what's going to be happening with our stock, especially with the buyout in that industry, in that company, however. So we're going to talk to Onose Asotie Enaolo, investment analyst, Main Street Capital Limited, to share his insights in the market and give us an update as to what to expect. Good morning, Onose. It's good to have you on the program.
Morning, Will. Thanks for having me.
Now, Onose, we've seen that the market has been bullish. It's closed positive yesterday. However, we saw negative sentiment in terms of the market breadth. I was talking earlier with Ladi, as in we see more stocks lose than gainers. Why is that?
Well, we're at a point now where investors are beginning to compare right? Investors are beginning to run comparative analysis. In January, February, we saw a lot of bullish momentum because everybody was, trying to get into sound companies for earnings and dividends. Well, now a lot of companies are beginning to, release their earnings results and announce their dividends, and now people are beginning to kind of determine whether it's worth staying in certain stocks that they've been in, or whether they should, stay in for dividends or just get out now and take what they've already gained. So, basically the tussle, between, the tussle between, those decisions is what we see now playing out in the market.
Okay, so we're expecting, if you look at this interesting dynamics playing out in the market, companies are still releasing their earnings. Now, what should we expect ahead of the the governorship elections? What reaction should we expect from the markets?
Well, the truth is the market doesn't really react to, I guess, specific candidates. It just reacts to the way the market reacts to elections is in a more general sense, because the truth is, unless something really major or something really extreme happens, like maybe fighting and war, which is not very likely, yes, we expect, very little scuffles here and there, like we saw in the presidential election. But unless something really major happens, business goes on as usual. And if business goes on as usual, the market goes on as usual. So in the end, what is really driving the equities market is not really who wins the election or specifically the elections themselves. It's just as long as it's a stable business environment, as long as the political climate doesn't negatively affect, the general workings of the business environment, then we'll see, the market progress like it has been progressing, which is basically being driven by, earnings releases and dividends.
Okay, so we're looking at that, and then we're wondering, we talked about treasury bills trending up with the last guest, and is that going to affect the yields, the interest rates for stocks? Is that going to make investors start looking at the bond market or the fixed income market to probably, rebalance their portfolios? Are we going to be seeing that happening since we're seeing a trending up in yields in that segment?
Yeah, I believe that, after the whole, I don't want to call it hype, but after the entire earnings season, right, the full year earnings season, we'll now see investors begin to look, into other asset classes, to kind of rebalance their portfolio. So I believe that at a certain point, now it might not be such a huge exodus from the equities market, but we will begin to see investors start to take out some of their funds, at least their profits, if nothing else, to go into, increasing yield. So that is something, we're going to see, especially after, dividend qualification dates. And, you can already see it in a stock like Geregu. After the qualification dates on the 27th, we have seen, significant declines in the stock price because, investors have gotten what they need and they're beginning to take their funds out.
Thanks so much, Anasa Sotie, now investment analyst, Main Street Capital, for sharing your insights with us. We're going to be looking out for the close of business today and see how the market closes today. So we're just going to go ahead to look at the unlisted equities market. We see it was a different picture for that market. It closed 0.02% down to sit at 724.81 unit. 81 points, 952.41 billion naira. That's what the market cap is still saying at the moment. And then we're expecting maybe a more bullish sentiment in the market as we go. Now, in the bond market, if we look at the bond space, if we quickly go flip to the bond space, we saw that bullish sentiment still continuing in that market. The average yield fell by 3 basis points to 13% across the benchmark curve. We did see the average yield falling at the short and the long ends, and investors demanded the 2024 paper and the April 2037 paper. And if we also look at the average yield on the mid segment, it was flat. Now, elsewhere, activities in the treasury bills market was muted, not a lot of activity going on there. Average yield remained at 4%. Now look at the home average yield was still flat in that segment as well. But we're going to see how the market pans out this week, Laddie. I mean, not this week, today. Ahead of the elections, because investors are already looking at the elections or others, macroeconomic factors to determine how they're going to play in the market, how they're going to invest, where they're going to put their money, or where they're going to pull out their money. So
exactly, and I'm wondering what new level we're going to break before Saturday.
We hit 50, we hit a high before the general elections.
55K.
Yes, 55K, and we're going to see if they're going to probably get to 56.
56,
or counting down.
Maybe we might just go crazy and hit 57.
Yeah, I'll start the countdown, Laddie. Start the countdown, and then we'll see how it works out.
Exactly.
So we're going to be
watching out for that.
And then you do talk about stockpiles in the natural gas. Well, be stockpiling your money for this, Laddie.
I'll be stockpiling. Thank you so much, Will. That was Will there with all the details for the NGX and the fixed income market. Let's head on to the UK now. We have Juliana standing by right there. Good morning, Juliana. So we're getting more data from the UK, and we're seeing the UK home prices picked up last month. Looks like a calm has returned to the property market in the UK.
Yeah, that's absolutely right. The property market in the UK has been up and down. It's ebbed and flowed since being the first sector to be officially released from lockdown in, I believe, about May 2020. So we did have a peak in August last year where house prices were just way above what most people could afford. And they're still really that way, because according to Halifax, that have released this data this morning, the average property in the UK costs £285,476. I'll allow you and the viewers, Laddie, to do that calculation in Naira, but it's a lot of money. And of course, if you want to live in London, just double that. But it's been growing. So it's been growing month on month. So last month in February, it grew 1.1%. And this follows about a 0.3% rise in January. And it does come at a time where mortgage holders, are feeling the pinch. And because of the cost of living crisis, a lot of first-time buyers are stepping back. And that's because of the successive rate hikes from the Bank of England, which has pushed interest rates up to 4%. So it costs more to borrow. Not only does it cost more to borrow, it's going to cost more for you to pay your mortgage back if you don't get a fixed tracker. I think this was obviously made even worse in September because of the Liz Truss mini budget disaster. But, if you can afford it, if you can get a massive deposit, then, of course, you can get a good property for your money. And if you do want to live in London, it is one of the only areas in the United Kingdom at the moment where house prices have fallen. I believe in that same set of statistics that Halifax released this morning, they do show that London house prices have dropped 0.7% month on month, but you're still going to have to cough up about £500,000 if you want to live here,
still quite high, if you ask me, Juliana. But let's look at other issues now. We see there are indications that hundreds of community pharmacies could close. Looks like it's still the issue of rising costs.
Yeah, that's absolutely right. This is part of a widening story that exposes kind of the reality of living in this country at the moment. It is very, very difficult. I know it sounds like a kind of hashtag first world story, but that is the reality of living in the UK at the moment. And community pharmacies have become, the backbone of lots of communities, particularly during COVID, where lots of people were just shut out from their GPs, too scared to go to the hospital. They were taking up the bulk of the issue of COVID-19. Now that we've come out of that, they're struggling. And just like the rest of the country they're struggling with energy bills. High inflation, currently at a 40-year high, is not bringing down the cost of medicine. It is increasing. And I think there was a report that has been conducted by broadcaster Sky News, and they have shown that about 600 pharmacies have been shutting every year. I think there are concerns that 800 could shut, and it's because they are not getting the support from the government. And the issue is lots of these pharmacies are privately run. They're basically franchises of the NHS, and lots of the support that they receive comes from the government, and they're saying they're not getting this support, and they are urgently in need of it if they are going to continue supporting the community as they have been doing so over the past 50 years.
Yeah, well, I guess it's the same issues, Juliana. Rising prices following us even into 2023. Hopefully, some point down the line in 2023, we could see those prices come down, hopefully. All right. Yeah. Thank you so much, Juliana. I'll talk to you later on at 1:30. Thank you. That was Juliana there giving us the details right there from the UK. Let's look at other markets now. Let's see what's happening with Bitcoin. Looks like Bitcoin is struggling with price action there. Looks like it's not rising anytime soon, with the Fear Greed Index hitting that 49-point level, still neutral in this market. Investors don't know which way to go, up or down for this market, but it's looking more downward with what we're seeing. Market cap trying to hold back that $1 trillion mark, up 0.40%. And we'll see volume traded 11.78% up. Bitcoin dominance 42.26%. Let's look at the price of Bitcoin this morning, $22,459, lower than that 22,500 spot zone, up 0.17%. We're seeing some little price action upward at this point. Maybe could be recovery. Volume traded $15.63 billion. Let's look at Ethereum now, $1,573, up 0.57%. Volume traded, a lower volume than what we're used to, $4.94 billion. And talking about Ethereum now, let's bring in Solomon Amunde, financial market analyst. Hello, Solomon. Good morning.
Good morning, Ladi.
Yeah, so talking about Ethereum, holding that $1,573 level, they do have another upgrade coming up. How do you see this impacting, price action going forward?
Okay, currently they just pushed the upgrade this month. That's like barely last week or over the weekend they pushed the upgrade. And short term, I wouldn't really expect much price impact, but long term there'll be lots of price impact. At least we'll be certain that Ethereum will still grab about $5K long term. So it's a very, very important upgrade to the full Ethereum ecosystem and also other EVM compatible blockchains.
And talking about the upgrade, what does it really do to the Ethereum ecosystem at this time?
Okay, so the upgrade basically tagged ERC 4337. What it does is it introduces new features to the Ethereum blockchain, such as accounts recovery, group access wallets, and also it enables people to have sponsored transactions, and where one person or multiple persons can have access to co-sign a transaction in a wallet, and so many other features basically too. So it's really, really a game changer for the Ethereum blockchain.
And talking about, game changer, we still, those Ethereum fees are still quite high if you're trying to make, transactions on the Ethereum network. Is this addressing, the concerns with transaction prices on the Ethereum blockchain?
Yeah, currently this current update, the ERC 4337, it doesn't address that, but it has a slight feature that can help, like for group transactions, where you can group multiple transactions and execute them, paying just one transaction fee. So it helps in that aspect. But generally, the gas fees for Ethereum currently is still high. Till we see the next upgrade, that's when would expect it to reduce a little. But long term, let's say within the next 2 years, I still don't expect Ethereum gas fees going below $1. Probably it's possible after the next 5 years.
All right, let's look at the sentiment in the market now. We're seeing the Fear Greed Index hitting a 1-month low. What does this tell us, and how do you think traders can, play the sentiment we're seeing in the market right now?
So currently, I feel the greed in the market is still quite low, and I feel people have gotten extremely comfortable seeing Bitcoin at 22K. Most persons ain't really thinking it would go down further, at least without a pump. So I feel the market, the sentiment is very, very even right now, and for those that want to go in long term, they can try DCAing into the market right now. It's actually a good entry point for long-term traders and hodlers. But for short-term traders and futures traders, we are still.
All right, so let's look
sideline. We're waiting to see a reasonable dump or a reasonable pump.
And obviously, it's some are still calling it, a bear market rally. But is there any new, sentiment we might see coming, any new trend, coming? Because the AI, that AI trend, I know it's still, with us in the market at this time. But any other trend, creeping up on the horizon?
Yeah, the Chinese tokens trend didn't last so long. The AI trend, I would say we ain't done with that yet. We are still expecting the wave 3 of the AI trend, probably with the next pump we would see before we see a major dump. But generally, I still believe we're still in the bear market, although I 100% believe the low in this bear market was actually $15,400. So I don't see us going below that anymore. But we can still go and test 20K dollars though.
All right, maybe those buttons might be tested again. We'll keep watching out for that. Thank you so much, Solomon Amunde, financial market analyst.
Thank you. Thank you.
All right, let's look at the top gainers. We see GMX topping that counter. Did have a major pullback, did hit that $80 level, but had a pullback with the market sentiment. 5.98% is what it's giving today. This morning, an engine, 43 cents, up 5.67%. That's for one of those metaverse tokens. So it looks like we're seeing some metaverse action coming up on the top gainers counter with Mana, the central land there, 60 cents, also up 5.64%. Could be give us a sense of direction of where things are going with the metaverse at this point. Optimism, OP, $2.53, pullback from $3. That's up 4.67% this morning. Let's look at the top losers now. We see SNX, that's topping the counter, down 3.13%. So it's more like a mixed bag we're getting in the market today. Single-digit gains, single-digit losses, not too big, not too small. All right, that's what's happening in the crypto space this morning. And thank you so much for watching. That's it for Business Morning today. Don't forget to join us, 1:30, Business Incorporated, more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.